Paulie boy, you there?
I'm here, man. Did you see me?
I see you great. Hey, everybody. I just got sprayed by my sprinkler, Paul. I'm trying to water some grass. Okay, folks. We're going live. How long is it, Paul? We are going live in for less than 15 minutes. Paul's ready. I'm ready. Paul, people are asking about the stock, the frenzy, the craziness, and we'll cover it all. You sound good, brother.
Yeah, it is pretty nuts right now.
I'll talk to you guys soon. Stay tuned if you're watching. Stay tuned. We love you guys. See you. Can you hear me, Paul?
I can hear you wonderfully. Can you hear me?
You guys look great.
Yeah.
Hey,
are we live?
Welcome. We are live. Welcome to the show. Paul, we were live a half hour ago. I love you guys. I see all the comments. Let me open up with this. We had some technical difficulties. We're trying to do something that, frankly, we haven't done in the past, and we're working toward. Paul and I are working together, so we apologize about Tuesday's live stream, and we're going to move forward and be awesome. And we're starting today. We're very happy to have all you folks in already. Paul, the like count is way up, and the comments are coming in, so we thank you guys for that. In general, Paul, this has to be, with all the absurdity of 2020. The last couple days have been even crazier. So the question is, people want to know, including myself, what are your thoughts on today? I mean, what are your thoughts on the market, the election? How are you feeling? And really, what can we do with our money to make more of it, Paul? I think it would be the first opening question.
So a lot of people have asked me about what I think is going to happen after the election for the markets. I don't know. I don't care. That's not my goal in life. That's too short-sighted. My goal is to sit there and say, where do I see companies relative to value? Where do I see the market relative to value? If Biden wins or Trump wins, that's not going to drive value. Now, can there be an argument made for higher taxes hurt value? Sure. But at the same time, let's wait for those things to happen, and let's figure those things out when they happen. If you want to try to get in the guessing game, I still believe in buying good businesses at good prices where even a tax increase won't affect them as much. That's my big philosophy on investing. If you're a saver in terms of buying ETFs and saving for the long run, don't worry about it. Your job is just to buy every single month. Is it fun to look at it and try to guess? Sure. But again, do that with a small portion of your money. I don't think there's a specific guessing game that happens. If you look at different things like options in terms of how they're priced, they basically go flip of a coin in terms of such a short time period. So, can I guess what's going to happen? Sure. Will I be accurate? No. Will anybody else be accurate consistently over time? No. They say they are, they're lying. So I just look at it and say, my job is to evaluate companies and buy them at a discount to what I think they're worth. That way, when this happens, whatever you think this is, whether it's good or bad, you're fine either way.
Paul, you mentioned that up. I mean, you mentioned the idea of guessing. Has never been your theme. And I have shown you videos of, I wouldn't say competitors, but other people giving stock market tips out there. And literally they're pulling up next year's projection data and then trying to extrapolate what they think the stock price is going to be. So how do you formulate your mindset about picking stocks and reading crazy markets like this?
You just have to brainwash yourself into saying, my goal is to buy a good company at a good price. That is it. Because a good company, look at a company like Microsoft. They've been around since 1975. That's 45 years. You don't think they've seen hyperinflation. They've seen 20% interest rates. They've seen terrorist attacks. They've seen 7 presidents, or rather 7 elections, 10 elections. It doesn't matter. They've still stuck around because they're a good company operated by good people. That's what matters. You've seen Apple go to the brink of bankruptcy and then rebound. I mean, this is what's big about great companies. They're just going to stick around, and they're going to figure their way through the bad times. That's why you have to look at those things. If you're trying to guess on where the market's going, by all means do it, but do it with a very small portion of your money and make the guess. And if you're right, you're going to make a lot of money. If you're wrong, you'll probably lose a little bit of money. Who cares?
So we saw some movers and shakers in the last couple of days. Everyone seems to be pretty astonished of what the market is doing. We've talked about a lot of companies that are making gains and obviously making losses. Do you see a few that are surprising you this week?
No, I don't know about surprising. Well, it's funny. Do you have my screen shared?
Yeah, I can get to it right now. Go ahead.
I was big on Hanes Brands at about $7 or $8 a share. Today it's down. Today, you see, it's down 20%. But they have bad guidance. They're reporting weaker earnings. But again, I bought the company at 8. I actually sold it at 12, I think. So it went up to 15, 16, 17 bucks. But it hit my number. I thought it was worth 12, so it hit my number. I was out. But this is a company that just popped up right here as the biggest loser on the S&P. Now look at this one, Biogen. I have options on this one. I was wanting to buy. I had it worth upwards of $400 a share on the high end, as low as 300 or 320, and it skyrocketed yesterday. If you look at yesterday, they had some big drug. Look at this skyrocket. It went up 40% yesterday. These things happen. Trader Mo bought some shares of it and then sold some puts on it, some options, and we made a killing on this. Not 40%, but we made where our options are in the money, are going to make us our money pretty much guaranteed. So those are the things I do.
Paul, tell me
overall,
before you get off of Biogen, we had talked about this in the past. So you made big gains on Biogen the last couple of days, and why did you pick that company?
Because it was very undervalued. Because I looked at it and said, man, this thing is really undervalued. And I was like, even if they don't have anything new coming on the horizon, I still think they're a great business to own with a good stream of current revenue. And Mo, who was going to be a physician, both our fathers are doctors. We talked to them. They said, yeah, they have great drugs. They have great drugs in the pipeline. You're fine. Then all of a sudden they hit.
What Paul's talking about is one of our friends, a day trader friend, Trader Mo. He's going to have his own channel. We've had him on. We're going to have him on more. He literally will fly over the country and go to these medical conventions to learn about the drugs these new companies are coming up with and how it's going to affect their stock price. So you're telling me, Paul, we analyzed Biogen weeks ago, maybe even months ago. So you made huge gains on that, huh?
Yeah, but I didn't make the 40% gains. I was doing an option. So I made my big gains very quickly, move on. Overall, my IRR was probably, with how fast I made the money, probably 30% a year, but I only had it for like 2 weeks. So so the total return is 1% over a 2-week period or 1.5% over a 2-week period. It doesn't sound sexy, but to me, those are the gains I like doing. Basically, banking on companies that are very, very solid that I think are undervalued. Sometimes they hit faster than others. This one happened to hit very quickly. So guys, I got lucky on. Go ahead.
I was going to say, guys, we analyze these companies using Paul's 8-pillar method of stock analysis. Paul, would you, maybe to humor us, can we pull up the numbers prior to this enormous gain and see why you bought Biogen?
Well, remember, I didn't buy Biogen. I sold puts on them. I bet on them.
That gets more confusing, but
yeah, it does. But let's look at Biogen. Let's just look at the company right here. So right now, I was looking at them around 260 a share, 270 a share. So when we look at this, we've got to subtract about 20% from everything. So their PE ratio here is 11. It was actually 8.8 when I first started looking at it. So that was a good thing for me to see. Their profit margin was over 10%. Gross margin, and this happens to be the case with drug companies because once they make the drug, it's pretty much set. So 86% gross margin. So I had 2 check marks off the bat. I went to their income statement. Okay. Last 5 years, revenue, 10.5, 11.13, 11.91, 12.9, 13.7. Check mark there. Profit, 3.5, 3.7, 2.5, 4.4, 5.9. Check mark there.
Yep.
Number of shares outstanding, 230 million down to 187. We've hit every check mark so far, right?
Yep. Pillar number 6.
Oh, by the way, here are my shorts.
Oh yeah. Thank you, Paul.
I'm wearing very basic khaki shorts. Sorry. Wait, everybody. The ladies love them though.
Carpe Diem, speaking of ladies, she's on and she's loving those shorts, of course. Keep going, Paul. Pillar number 6 is assets over liabilities.
Yeah, so this is a drug company. This is going to be very, very solid. Total current assets, 7.8 billion right here. Total current liabilities, 3.8. They have $4 billion extra cash. And the other thing is their total liabilities, only 14 billion. So they have a really good ratio here. Another major check mark here. And then cash flow. Guys, this cash flow is insane.
John, we'll get to your question a bit. John's asking about a loan company, a little off topic, but we'll try and answer some of that. And John, Paul, I don't mean to interrupt you, but John,
He's talking about Quicken Loans.
Oh, okay. Oh, I see. Oh, Quicken Loans. Got it. Okay. Quick Loans. Oh, got it. Yeah, and
so the free cash flow here.
Too. Go ahead, Paul. This is free cash.
The free cash flow here is very solid, and I'm going to figure out. So right here, look at it. Last 5 years, 3.3, 3.8, 2.6, 5.3, 6.1, 6.3. So what's that average to, Seth?
That is 5.
Really 5. So 5 times 20 is 100 billion. We should want to pay $100 billion for the company. Look at this.
It's still only at 50.
And when I was looking at it, it was at 40.
Wow.
So I'm looking at going, there's a lot of upside in this thing. I felt comfortable once I understood that Mo did the research on the pipeline of drugs, et cetera. And I'm like, okay, this is fine with me. So I didn't buy some yet. I thought it was going to go lower. Hopefully they would get a couple bad rulings. I was actually hoping for them to get a couple bad rulings, FDA, but they actually hit one. So it kind of went up a lot. But, this is a company I'm going to follow and probably buy as it goes, and maybe even buy now. I have to talk to Mo about it. Maybe 20 times isn't the right number, but 15 times it's still going to be a $75 billion company. I'm cool with that. So this is what I saw in it, and it hit every single check mark. Like literally, it had 8 check marks.
Even after a 40% rise, it's still doing well.
Well, let me show you my my trusty Excel sheet. So can we share my other? I'll just bring it over here. Hang on a second.
Sure.
Do you guys see this?
Yep, looks great.
So guys, this is an Excel sheet I made. Seth, can you put my image on the lower left?
Yep.
So this Excel sheet I made, it calculates everything from this data pulled in from Y charts. And guess what, guys? This is what our app is going to do. It's going to do all this for you. And I sat there and wanted a 15% return. So it says the company's worth low side 246, high side 408. It factors in revenue growth and profit growth, and I put discounts to them. Anywhere between 50, 25, and keep it steady.
Okay, Paul.
30,
let me pause you real quick. And I want to get very serious with you guys right now. So pay attention. If you're looking at this chart, the amount of time and effort Paul puts into his operation, and the way
and money,
time, effort, and money. I'm telling you, I watch all the investment channels you might be watching too. And when these numbskulls are sitting in their basement not analyzing the true numbers of looking at projections, I give you this. I mean, now Cameron says our metrics like EPS overrated, Paul.
So Cameron, that's a very good question. They're not overrated, but I like to look at the whole company as a whole. I don't like to look at it as a per share basis. It's the same thing though. It's like saying, I don't know what it's like saying, but it's just, do you like per share or total? I like looking at the total because the number of shares can change over time. I still want to see that the company itself is getting better and not just they're manipulating the number of shares to make it better for the investor. So I like look at the whole company saying, okay, this company is doing better overall.
Show us that spreadsheet one more time, Paul.
This is a spreadsheet. It's complicated. I'm not gonna get too much into it. Here are my 8 pillars. They're all green, just to show you like how it changes. Like, look, this one, Microsoft, 2 of them are not green. HBI, if you look at this, HBI has one. This is what I just do all day long. But I don't buy just because all of these are green. I buy when the price is where I want it to be. My net present value, I want to make 15% on my return. I have to pay for Intel between 39 and 68. Again, guys, why the big range? It's all based on your assumptions. I'm assuming revenue growth and profit growth decreases over time. How much? I don't know. That's part of the qualitative aspect of investing. I have to figure that out.
Paul, folks are asking about Alibaba. What do you think about?
What
do you think about this company?
So let's understand something about Alibaba. Remember, guys, this is a Chinese company. I'm not trying to sound like President Trump, but there's blatant evidence of massive manipulation and data being reported from Chinese companies. Am I saying that's for sure? I'm not saying that for sure, but you got to be very apprehensive about some things because we have no way of verifying their data. We have zero way of verifying their data. Okay, so the company, $785 billion value. If you wanted to buy the entire company today by buying all of its shares, you got to pay $785 billion. PE ratio, 31. So it's already higher than we want it to be. Mm-hmm. Now, granted, this is a fast-growing company potentially. So you might be willing to pay more money for it. Gross profit, the bottom line profit, 31%, check mark here. Gross profit, 45%. Seems a little low, it seems a little low for a company that does 31% at the bottom line, but that's fine. So far, 1X, 1 check mark. Annual growth in revenue, 16, 23, 38, 56, 73. Check mark there. So we have...
Sorry, Paul, I had to put that in.
I was wondering when you're going to chime in with these.
I know. We're working on it.
Profit, 11.2, 6.5, 9.7, 13, 21. So definite check mark there. Number of shares outstanding.
Pillar number 5. Slow down a bit. Slow down a bit.
Sorry.
Pillar number 5 is number of shares outstanding. We want this number going down.
Yep, and it's actually going up.
Now
so if you look right here, 2.45 billion to 2.6. Not a ton, but it's still going up. We got to be technical on it and just give it an X.
Slow down. Why is it going up, and what does that do to people's shares? Just say it one more time.
So it's going up because they're issuing more shares for any number of reasons. And by the way, people, my screen keeps going black only because of this camera thing is weird, but it just goes black for like 2 seconds. But remember, when shares are going up, number of shares are going up, you own less and less of the business. If they have 10 shares in the company and you own 1 share, you own 10%. If all of a sudden they issue 5 more shares, now there's 15 shares, you still have 1 share. And it's not any sort of split. If it was a split, it'd be different. But they're just issuing more shares to make an acquisition or to finance something. And now you own 1 out of 15 shares, which is 6.6% or something like that. So you have been diluted, as it's called. You own less of the company. That is not in your benefit. Now, can they do things with those shares to increase value? Sure. But companies tend not to do that long term. So total current assets of Alibaba, almost $70 billion. That's a lot.
This is pillar number 6, folks. This is assets over liabilities. We want them.
No. It's higher. Total current assets over total current liabilities. I mean, to be very specific that it's current, not total.
Go ahead, Paul.
So they have $35 billion in current. So they have twice as much money in their bank account than they do to pay off their bills, which is awesome. But even better, if you believe this number, their total liabilities is $63 billion. So they have $70 billion in cash and $63 billion in all liabilities. That means they could take their cash, pay off all their debts, and still have $7 billion left over. That's a huge thumbs up for me. Now, free cash flow.
Yep.
Okay, last 5 years. Seth, you ready to write these down?
Go ahead.
7.2, 9.6, 14.5, 15.1, and 19.4.
Wow, 65 bill. Is that billion?
So 65 divided by 5, 13 billion average times. It's a fast growing company. Let's call it 25 times. We're willing to pay, based on this ratio, 25 times the average of the last 5 years, which is 325 billion. If you remember,
785.
Yeah, so we're way off here. So this company needs to fall big time.
So this is the culmination, Paul. After all, so like, folks, if you're following along, this is the culmination. Paul takes the 8 pillars, looks at it, and then comes to what decision, Paul? When the number you come up with is much lower than the current market cap, what does that mean?
So that's a good question. My goal isn't to sit there and just say buy or sell based on my 8 pillars. The goal is to sit there and say, if it's close, let me go do some research. This is so far off, I won't probably go any further. Unless I think that their growth is going to be astronomical, like 50% a year or whatever number it needs to be for the next whatever number of years. For this company, and I do question the reliability of the data, I just avoid it. I'm just doing it because you guys requested it. But for me, Chinese companies have a hard time giving accurate information. It's been proven. Somebody go Google it sometime on your own. I would just stay away from Alibaba. I mean, if you want to buy, to me, Amazon is a local company, also overpriced, but not as bad as Alibaba. But the question is Alibaba really reporting accurate data? I don't know. We'll have to see. But let's exclude the fact that they're in China. They're in the US. I would still be saying I'm not buying this company. I'm going to wait for it and watch it to fall.
Jeff asked, would you recommend long-term investors an ETF to invest in Asia or individual stocks? What do you think, Paul?
That's a great question. I think if you can't do the individual analysis, you should do an ETF. I think it's a great question, Jeff. Whenever you want to do a certain sector, industry, or market, if you always want to bet on the whole thing, ETFs, I would do the same thing. I have some bets on Jets, the ETF, of it dropping and doing things like that. So I bet on that stuff overall.
Paul, this is pretty interesting. I instantly thought of you because you've been so against cannabis. Can
we get some likes, by the way, people?
Oh, yeah. Paul, would you hold that mic like that again? Yes, that's how desperate he is, folks. Please make sure you're smashing that that thumbs up button right around. It's all around Paul's side of the screen. But yeah, make sure you guys are smashing. We're happy you guys are here. And we see some OGs. We see David S. Pumpkins, John Thessing is here. Thiesing, sorry. But Paul, this is interesting. Dave asks, are you guys more optimistic on weed stocks after a bunch of new states not only legalized
Pass.
recreational marijuana and decriminalized some drugs? So what do you think about all this, Paul?
Pass. Listen, guys, 100 years ago, the car industry and the airline industry had major potential, unlimited potential. How many cars are driven today versus 100 years ago? How many people fly today versus 100 years ago? In that time, how many car companies have gone under, and how many airlines have gone under in the last 100 years? You can't even count how many. So just because the industry has a lot of potential doesn't mean that everybody's going to do well in it. This is the biggest misnomer of investing. This is actually the biggest threat to investing. You are not investing if you say, oh, because the industry is growing, I'm going to go buy something in it. It's just like real estate. Oh, that market's growing, I'm going to go buy the best property in that market. No, it's still about value. It's still about cash flow. It's still a stream of, and the more people that believe in it and are going to do it, the more competition there is, the more likely that yours is not going to do well. That's why I like to go to things that are not doing as well, that are kind of overlooked, because the prices get to be down. John Thiesing. Don, can you put up John Thiesing's question, please?
I got it here. Go ahead, Paul.
Oh, you do it? I'm sorry, Seth.
Okay, go ahead.
The question is, it's a great question. Have you ever found a stock that has a price so low it worries you, like too good to be true? Absolutely. Every single time a stock price is very low and it's so low that I like it, I always sit there and first thing that's in my mouth is like, okay, what am I missing that the market sees? My goal is to sit there and say, no, the market's missing. I'm not. That's the goal. But there are plenty of stocks out there that are selling for way lower than my price that I wouldn't touch. I can't give you an example right now, but I've seen them and I'm just like, nope, not going to touch that. There's reasons why they're failing and not worth it. But I put my analysis in, I put it into my model, and if it works, I do more research. I read the 10K. I look on the internet for what people are saying, pro and con for the first con for the company. I want to see what the other side is saying. I talk to other value investors. What are you guys saying? And if I still believe in my thesis, then I do it. That's the point. That's a great question, John.
Paul, I love this question too for some of our new viewers and new people who just subscribed. Welcome. We love having you. This is interesting, Paul. Corbin just simply states, what the hell is going on? I'm confused. Like, is he right to be, of course?
Yeah, I have no idea what's going on, Corbin. It's just, I thought the market wanted Trump to win. And then all of a sudden, Biden starts to show a lead, and all of a sudden the market skyrockets 2 days in a row. I mean, it's nuts. I mean, I've lost a lot of money in the last few days because I have a short on the S&P. So I've lost, multiple six figures in the last few days. And I'm okay with that because I still think in the long run, it'll be better. But this is what the thing is, guys. You got to remember, in the short run, markets are not rational. Like, anything can happen day to day, week to week, month to month. I bet on the long run. So this is messing with my brain. I just giggle about it every morning. I look at the pre-market. I text my brother and Mo, Trader Mo, and I'm like, okay, the market's up 2% pre-market. Sounds good. Like, no reason why. Okay, sounds good. Moving on.
Paul, John Thiesing also asked, Seth, is it Thiesing or Thiesing? I love you. What sites and places go to find information disagrees with you, Paul? And I think, John, it's funny you asked that. I think if you look around YouTube, in terms of other investment channels, most of them agree with Paul. They're telling everyone to put their money in NIO and Tesla. And I complain to Paul all the time. So Paul, because I want Paul to, at times I'm like you, our fans, is I want Paul to stop saying I do this and start saying a little bit of you can do this. For example, Paul, I'll bring it back to NIO has been explosive diarrhea this week, and I argue with you about the idea that market hype can be a way for some traders to make money. So why don't you give us your thoughts on NIO as a disciplined investor, and as well as maybe someone who wants to be a little splashy with a few dollar bills. Show me what you got.
I'm not even going to talk about it from a disciplined investment standpoint. It's garbage. But John, I go to this website, seekingalpha.com, and I just type in whatever company I want to see, and there'll be a bunch of articles about it, analysis, and I just start reading. Big reason to buy NIO. I'll click on that one. Okay, let's a big reason to buy it. Strong. I will look at any of these articles and read them, see how old they are, and keep going. That's what I do. I just read and read and read and read. And Seeking Alpha is pretty free, and there'll be a lot of comments down here, and I read them. I go through them, and that's that. Seeking Alpha is the one place I go to the most. It's the most open area for comments from people. But as for Neo, I'm not even talk about Neo. Neo's garbage from a financial standpoint. Doesn't mean you shouldn't own it. It just means if you're owning it for the financials, then you're not a financial person. Now, from the standpoint of technicals, I mean, Jesus H. Christ. This thing has been over the 50-day moving average for how long now? I mean, this thing has been... This thing's been over the 50-day moving average since freaking February, January. And it's just skyrocketed from there, and it's getting wider. I mean, this is what Trader Mo will talk about. Is Trader Mo in the chat? Oh, he is.
Yeah, he's in there, yep.
I wish Paul would just admit that he owns millions of Tesla shares. Yeah. I mean, Mo, look at Neo and let us know what you think about the technicals on this one, the chart on this one. I mean, it's clearly in positive momentum. But if you look at this rise here, I mean, this is a parabolic rise. These don't go forever. Parabolic rises have massive falls. Doesn't mean that 5 years from now it couldn't be higher than this, but short term, it's opening itself up to more opportunity for a fall. So from a financial standpoint, garbage. I mean, it has no income, has no profit. It hates winning. It hates making money. Literally, it hates it. Every year, it's like, oh, well, we prefer to lose more money, so I just can't analyze it.
Paul, we have some questions, guys. If you're following along, Paul, I hate to say we're getting to a point where we never thought this would happen. We're getting so big where it's hard to answer all your questions. So I'm trying to pick and choose and stay a little bit on topic. Someone asked, what do you think about Berkshire Hathaway? Paul, I texted you yesterday because my side company, DGF Spray, we just got a request that Berkshire Hathaway Energy Group uses our product. So I was super stoked to hear that. But Paul, they just said, what do you think of it? Does Paul like Berkshire Hathaway?
So I do. Everybody want to look at their main shares, 313,000 a share. To buy their Class B shares. $209 per share. They're even kind of pricey, guys, which is kind of funny because Warren Buffett's underperformed the market over the last 10 years, but they are kind of pricey. They have a 23 times earnings. They have a good profit margin, 27%. But you got to remember, they have so many stocks that those stocks are making their profit look higher because there's a new law that states every quarter they must adjust the value of the portfolio as income. So if they own a stock at 10, it goes to 15. Even if they don't sell it, they have to report $5 per share in profit. So that's a little misleading there. That's a good one, Vinny. I actually have Chrome on the other screen, but I have Edge on this main screen. I do like Microsoft Edge. So suck it, Vinny.
So let me, Paul, I've now seen like kind of what our show's developing to. Like when you cut to the boring financials, I just read the list for all the comments that are busting your chops and I just throw them in, just sort of like, I should probably stop doing that because it's like time to bust out Paul, but they do love busting you up.
It's funny. So with Berkshire, if you believe in Buffett and his philosophy, he's 90 years old, guys. He is going to die sometime at some point, and I think Berkshire will take a hit. I do believe he has wonderful people running his companies. He has very like-minded, good investors. He talks about it in every annual report. He won't disclose who they are, but he has very, very, very smart, disciplined investors that are going to keep, and people running his companies that are phenomenal people running the company. Warren Buffett's done a great job building an organization. Seth and Don always fight me on that. I shouldn't bring Don into it, but Seth always fights me on building an organization, right? Right, Seth?
Yeah, like, I'm sorry, I'm keep reading the companies.
Don't worry about it. The bottom line is, I think if you wait for this company to fall, I mean, in a high market like this, I'm sure there'll be an opportunity to buy it at lower prices that you'll be able to do very well with. But, this is a great company, and I don't think they're not going to be sexy. Because look at this income right here. Look at it by year. That's 5 years, 24 billion, 24 billion, 45 billion, 4 billion, 81 billion. This is insane. This was probably the stock market falling at the end of 18. That's what caused this thing to fall. This is probably the stock market crushing. That's probably what caused this one to go up so much. So it's just, how do you handle this? I mean, it's just really hard to understand. So let's look at their free cash flow.
Pillar number 7, free cash flow growth. Cash from
Yeah. So
capital expenditure.
15, 20, 34, 23, 24, 23. Remember, guys, this company has a lot of stocks. The free cash flow is not going to show up in this metric. So if you only base, this is an example of where you can't just look at free cash flow. They have a lot of equities. So if you're basing their value just based on the business operations, you're going to underpay. You're going to underpay. So this is a company that it actually doesn't seem too overpriced at this level. But again, if you can get it at lower prices, I mean, look at this. Back in March, it was down to 160. That's incredible. So do whatever you want with it, but it's a great company. I think long-term, you're going to do very well with Berkshire Hathaway. Even if you bought it today and you're okay with just a lot of slow growth or a loss for a while, if you dollar cost average into this, I think you're going to do very, very well over the next 10 or 20 years.
We did get a thumbs down on the live stream, Paul, and the chat line is fired up. They want to revolt. They want to riot. The cancel culture is jumping. Yeah. Paul, we're thinking it's because we can't see your nut hugging shorts. Corbin asked, Paul, Corbin's got some great questions today. How much of your portfolio do you put in options, and how do you manage risk on a market like now? This is interesting.
Oh, that's a great question, Corbin. As much as I can, Corbin, I'm not afraid of options because the way I buy my options is the way I sell my options is I sell them at prices of companies that I want to own them at. So if I want to own a company at 45 and it's currently at 55, I have no problem selling an option at 45. And if I get placed the option, great. If it goes to 43, I lost $2. Fine. I would have lost $2 anyway because I'd have bought it at 45 anyhow. So to me, options are just my way of just generating a lot of income as I wait in this market. I'm just generating multiple 5 figures a month trying to do that. You know what I mean? For the portfolio, not for me, myself, but for our family portfolio, family office, that's what I'm doing. So it's just the way I like doing it. And we use it to go pay for our other high-risk ventures like Dynasty Owner, dynastyowner.com, check it out. And that's why I do it, because I want to generate that income along the way while I wait for the market.
Someone asked, do I collect flags? No, actually, this flag is from my grandpa from the 40s. It's a 48-star flag, and I love the Ohio flag. Paul, you got to love that Ohio flag. But
it's beautiful.
I asked Paul, guys, if you're watching, is this too much of like a dorm room type background? So if it is, comment in below and tell me I look like a 20-year-old schmuck from the College of Worcester. But yeah, let's see. Paul, What do people think of our new setup? Comment on that one. Like, we're doing this now because of the technical difficulties we've had over the last few weeks down in the studio. We still love the studio, but at the same point, we also want to do this because we want to make sure that as things unfold quickly, we can do this very quickly. I can get on, do a 5 or 10 minute live, get you guys in there, listen to me talk, boom, 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 boom. Paul, people are asking for some 8-pillar analysis on some particular stocks.
Which ones?
I have a whole list coming up if we'd like to get going. The show really falls when you leave. Oh, great, you're back. Okay, I would say, Paul, one more thing. Jeff says, what are your thoughts about, what do you think about, Jeff asked, what do you think about retail sales coming into the Christmas season? We have seen all year that as they send out stimulus checks, and no matter what happens with the deaths, the COVID, the jobs, everything shut down, it doesn't matter. Folks, I would say, I'll preface this. We'll come right back to that question. Paul and I just did an episode yesterday with a local Pokemon connoisseur, and with the rise in Pokemon, I play Magic the Gathering, which is a nerdy, stupid card game. But it seems like people are getting their checks. They're staying home. They're making more money not working than they are, and they're spending it everywhere. So, Paul, what are your thoughts on retail as we come into the Christmas season? And you know, Paul, I have a hard time getting you gifts for Christmas because you can buy whatever you want in the world. So I have to get spicy with
yes, don't give me Trader Mo is texting me in the middle of a live stream. Why are you doing this, Mo? So Mo and I are going to Mexico tomorrow, so he's asking me what my seat numbers are so he can get my seats. Because he'll forget. That's what he said. I don't know what's going to happen with retail. Again, that's too short term of a response. I'm more of a let me react to what the market's doing, not let me try to guess what the market's doing. That's the only thing I'll sit there and say. My MO, my way of operating my investments is to react to what I see, not to guess where things are going to a certain level. My short is kind of a guess, but it's a reaction to me seeing that there's massive massive overpriced. Now for retail, the only concern I have is the stimulus money ran out last week, and I don't know they're going to get anything done before Biden takes. Because I do think Biden's going to take the presidency. So I don't know if anything can get done in that meantime, because I'm not going to get into politics about it, but I just think Trump's going to fight tooth and nail, and he's going to spend all of his time fighting this election. What are you going to do in that time period? Seth, what do you think? I don't know. I mean, what's going to happen? You're not going to have a stimulus out there.
That's for sure. Yeah. So Paul, let's get in. We have a couple people asking for stocks. Why don't we get into some 8-pillar analysis?
All right, let's do it. Give me some stocks.
The first one, you had it looked up before, but it's UNP. Owen is asking, can we look at UNP? Let's get after it.
All right, UNP is a railroad company. So our buddy Warren Buffett loves railroads. So $130 billion market cap. You want to buy every single share on the market. Remember, we don't look at share price. We look at market cap, because that's going to tell us exactly what it would cost us to buy the company. When you're buying a stock, you're buying a piece of this. So you might as well assume you're buying the whole thing. PE. Okay, a little high to start.
Yeah, pillar number 1, PE ratio. We want this under 20.
Now, let me ask everybody, why does Warren Buffett love railroads? Anybody know? Seth, do you know why?
Is it something to the effect of they've always been around, they're not going away, they're
massive. Why aren't they going away? They're massively efficient. Like the cost to ship something on rail. Now the problem is the speed. It takes a long time for something to come, right? So you have to sit there, and that's the big thing. But a lot of people want to save money. So you're like, okay, well, do I really need it tomorrow? No, I can wait a month for my container to show up. I'm cool with that. You know what I mean? So that's what they do. So that's why it's very important. That's why railroads are very popular. So
okay, keep going.
PEX. Profit margin, check mark. That's a pretty healthy profit margin. This is actually one of the lower profit margins I've seen for railroads, I think. I've seen upwards of like 80, 90%, I think. But they have a good dividend, 2%. So they're paying something right now. All right. So we have one X and one check mark so far.
Let's go to pillar number 3, revenue growth over the past 5 years.
Okay, this is kind of weird. It's actually an X. 20 billion, 18.6, 19.8, 21.3, 20.24. So it's not very consistent. There's jumps up and down. I don't know why that is, but if you look over the last 10 years, they're up about 25%. So not major growth. You're probably going to grow. My guess is railroad revenue would grow as the economy grows, especially for a big railroad like this.
How about profit growth? Yep. Pillar number 4.
4.8. Nope. 4.8, 4.2, 10.7, 6. So it's a check mark here. I don't know why they had a big growth right here. What's the reason why they made a lot of money here?
What year was that?
Let's see how this one. That was 2017. They just made more. That's weird. Oh, they had a big tax write-off. So they got money back for taxes. Something happened.
Mm-hmm.
So this should actually be about $7.7 billion right here, which is still high. So a check mark here.
How about
shares outstanding?
Yeah, pillar number 5 is we want the shares out. We want the number of shares going down, Paul.
866 down to 703. So check mark right there.
Nice. How about
that's good.
Current assets greater than current liabilities is pillar number 6.
That is one. Let's look at it right here. Total current assets, $5 billion. Total current liabilities, 4.8. So check mark there. Not by much, but check mark there.
The show does feel empty, Paul, without my sound effects. I mean, I would.
Yeah, we need to get your sound effects going.
I think our listeners would agree, but I got to get that damn board back. Okay, Paul, let's go to the number 1 stunner, free cash flow. Pillar number 7, free cash flow growth.
Now, railroads, as you can imagine, a lot of locomotion, a lot of lines. There's going to be a lot of capital expenditures. They have to spend a lot of money to keep their business going. That is something that Buffett doesn't really like very much, and it's very high here if you look. So in the last 5 years, they had $2.7 billion. Seth, are you writing these down?
Oh, I'm sorry. Go ahead. Go ahead, brother. Go ahead.
2.7, 4, 5.1, 5.2, and 5.2.
21.
What's that total?
21.
What is that? So 4.2.
4.2 average,
4.2 is the average. Times 20 is 88. No, 84. And it's at 130. And I think this is right, guys. I don't like a premium being paid for this company because of how slow the growth is. This is going to be a very slow growing company. They're so big. They have, I mean, somebody has to look up. Look at this. They have to look up 30 miles of track, 30,000 miles of track in the western 2/3 of the U.S. God, this is huge. It will be hard for them to grow fast. So you have to account for that when you're doing it. Do you understand what I'm saying?
Can we take a look at momentum for this company, Paul?
We can. Now let's look at really quick though. If you look right here in my sheet, and again, this is a very high level sheet. This isn't telling you have to buy this at a certain price. But Seth, if you could move my video down to the lower right.
Yeah.
Be a good boy.
Mm-hmm.
Okay. Right now they have they have 5 of the 8 pillars here. This was that did it for us. And my price is 61 to 85. And they're currently at 193. So they have to go a lot lower. And that pretty much is consistent. 1/3 the price was what we came up with based on making 15% per year. So that's pretty consistent. Now let's go look at momentum.
Real quick, Paul. Guy asked, where can he get to 10K if he wants to look at this further?
SEC.gov, and just type in their ticker symbol in the search, UNP, and it'll drop down. Click on that, and then you'll have to enter 10K into the search. Hit search. I'll just show it to you right now. What am I doing?
Well, Paul, do you want to get that detailed now? I was going to say.
No, I'm just gonna show them how to do it.
Okay.
I'm just showing them how to do it.
I would say, guys.
10K, search, documents, first line. There's your 10K. All right.
Guys, we are developing. Paul and I were on the Patreon. Don and I were on the Patreon page today. We are developing that. What that will include is a month-by-month membership where Paul and I will give you more than what you're getting on YouTube. We're thinking about early releases. We're doing a Discord channel. As always, Paul has been very transparent with his portfolio review as well as mine if you'd like to see it. I believe, Paul, I really represent our viewers in this. A very average standard guy. My dad drove a dump truck. I had tons of student debt, and I've been building for a while. So I don't have this massive sort of portfolio that you might see with someone who makes a few $1 million, but we'd be willing to share. But the Patreon will get you more exclusive access. We will do very in-depth videos about options, puts, reading Ted Case, things of this nature. I think some of these might be over the head of our casual viewers, Paul, but we'll be offering that very, very soon. So anyway, Paul, that's great. So
by the way, can we show everybody?
Go
this
ahead.
is what we want to be behind me when we do a live stream. This is my office.
Oh, Paul, yeah. So
there's
we want this gorgeous, this beautiful piece of artwork, which is an enormous 6-foot $100 bill, and we're trying to get that in the background because I think it would be so dope. So yeah, but okay, Paul, this is really interesting. PLO Small Stake says, can you contrast it with KIQ Railroad in Canada? Do you want to look that up real quick?
Yeah, let's look it up.
While Paul's doing that, guys, while Paul's doing that, make sure you are smashing the like. You guys and gals are doing a great job doing that. And yeah, Paul's having way too much fun being a YouTuber. That's absolutely true, Paul. This is incredible.
Oh, 1,000%. I love it. I'm not finding KIQ. A railroad.
PLO Small Stakes.
If you're there,
PLO, if you're there, can you help us with this? Is it KIA Railroad, Paul? KIA.
I'm not seeing that.
Okay. And Llewellyn asks, what is a 10K, Paul? That's pretty interesting. What is a 10K? You kind of fluff over the top.
10K, that's great. 10K is the boring annual report. So every company creates an annual report. They make it look pretty. And there's kind of a book I'm reading right now called Good Cheap Stocks. Good Stocks Cheap. Same thing. And he talks about, he jokingly says, the prettier the 10K, the more you need to ignore it. Sorry, the prettier the annual report, the more you should ignore it. The 10K is all the financials and all the explanations of everything the company is doing. They're going to put very specific information in there. You'll get a lot of information there that it's basically the secrets of the company. They're not going to disclose everything publicly so fast, but this is a public document. And they know it's 150 pages. Not many people are going to read this. That's what it takes to be a good investor, is you're reading these documents. Now, my friend Gary, he reads them top to bottom, left to right, all the time. I do not. I look at certain sections. I try to find answers. I try to look at things. Do I read them pretty thoroughly? I read them way more than most people do, but I'm scanning a lot of it. I skip sections that are just like, okay, I know this. I don't care about this. I'm looking for hints about their revenue, their profit. And if I'm looking at a company for a specific reason, I will search for things in the 10K that can answer those questions. That's what I'm looking for in the 10K.
Paul, Mario asked this before, and he had to clarify. I thought he was telling people to get their life insurance in China as a joke, but he's actually saying, can you analyze China life insurance? What the hell is he talking about?
Well, I want to kind of avoid more Chinese companies just talking about them, because the other thing is insurance business. Yeah, it is racist. The insurance business in general is one I don't know very well. Like I don't have Aflac. I don't have. I'm learning banks right now, and the next step is insurance companies, because the way they handle their financial statements and the way they make money is totally different than everybody else. It's not like, oh, you have a widget. Let me go sell this widget. There's a certain gross margin, et cetera. You know, when I asked my friend Gary about bank free cash flow, he said to me, and he was serious, I don't think even CFOs of banks understand their real true free cash flow. And he's serious about that. Mm-hmm. So you have to look at banks differently. And the person who's helping Mo and I learn banks, yeah, everything we've done has had nothing to do with any metric on the 8 pillars. And the same thing goes with life insurance. It doesn't have as much to do with the 8 pillars as everything else. So not only is it a life insurance company, it's also in China. I just want to kind of avoid it.
Tony says, what about this BOMN? They compare it to a small Berkshire. You want to look at it?
BONN? BOMN.
BOMN.
Boston Omaha Corp. Invested in real estate. Multiple billboards. Three separate lines. Billboard, business, outdoor billboards, surety. Again, insurance. Let's take a look at it. It's a small company. $450 million. No PE. So they didn't make money in the last year. Probably, let's see why that is. Yeah, they don't make money, guys. Does that mean it's a no? It doesn't mean it's a no. It just means that, I'll tell you one thing. Warren Buffett always made money. Yeah, this is bad. It's a small company. My recommendation is let them establish themselves more. You'll have a better time probably to buy them at that point. But let them establish themselves more. They haven't made money in a full year yet. Kind of a iffy thing to me. But if you want to buy them, maybe focus on their price to sales versus competitors. Because price to sales is a good ratio to see how people in the same industry kind of look like each other. You can compare people, because if they're in the same industry, they're probably going to have the same profit, the same feel for it. So look at price to sales ratio as a way to compare different companies within the same industry that you might not understand.
Make sure you guys are smashing the like button. Paul, I think we've gotten, who is saying this? I love you, but they want to look at Benjamin, a big fan of ours, Paul. He wants you to look at Broadcom. You want to pull it up, baby?
Absolutely. Let's look at Broadcom.
So we are getting stoked again, guys, with the Patreon. Not only will we have Paul's developing the app that'll do all these 8 pillars, like that spreadsheet that he has, but Paul and I have so many more ideas. We're thinking about like an invitation only, Patreon only, uncensored Paul and Seth cursing and drinking, like kind of like a night show where for 2 or probably 3 hours we'll argue about financials. Hopefully not too many politics. But yeah, so we're gonna keep teasing this as we develop it. But
no, we're gonna talk about politics, Seth. And the reason we're talking about politics is you and I have differing politics, but also similar politics in a way. You know, we have very similar views on a lot of things. We also have differing views. And the one who gets heated is usually me, not because it's at Seth. It's just usually in general. But you know, we want to be really uncensored. I want to talk about everything that we want to talk about and just completely be as uncensored as possible about it. That'll be fun.
My son.
All right,
my son joined. My son joined the 10-year-old prodigy. Paul, you know, he's been writing down his checks and analyzing companies, listening to his Uncle Paul in his spare time. So,
can you bring up Marco's question about the Patreon, including the spreadsheets?
Yes, that's a good question. Let's see. Will this Patreon
bring it up? Okay. The Patreon will not include that, but the app will. The app will include, you know, the analysis and what we think the stock is worth. But there'll be big caveats in there, guys, because it's not to say this is what it's worth. It's based on the previous data and making assumptions in the future. So again, don't make your investments based on that. You still need to do more detailed, just like me. I don't buy based on the Excel sheet. I buy based on, I go further based on the Excel sheet.
All right,
I'm going to go further on this one.
Let's bring up Broadcom, and because Benjamin's been asking about it. So here we go.
Yep, let's do it.
What's the market cap?
So 153 billion. So you basically buy it. If you want to buy every share outstanding, you're going to spend $150 billion on it, right? Okay.
Yep.
PE.
PE ratio, less than 20. Pillar number 1.
Look at that.
Oh my God.
Yeah, it's 500, guys. This is big. This is a big, big, big PE. This is tough. Profit margins there, check mark. Gross margin there, check mark. Last year of net income, beautiful. But right now, PE is 500. This tells me there's probably something in the last year that they might have taken a big hit on. Because actually, you know what? This might be an error. Oh, this is an error. Guys, I think this is an error. Unless they reported some earnings rates. Because look at this. 153 divided by 2.4 is like 60. So something is wrong here. This might be an error on Y charts.
Benjamin saying that Robinhood saying the PE is 66. So what you want to call it that?
Okay, it's 66. It's still an X. But let's look over here.
Okay, keep going.
Last 5 years, 6.8 billion, 13 billion, 18 billion, 20 billion, 22 billion. Definite check mark here. Now, I have to think there was acquisitions made along the way. Income, 1.3, a loss, 1.8, 12.6, 2.7. Check mark, and big tax gain in last year of $8 billion. So this isn't really, well, look at, to me, I'm already looking at this saying, I'm not even going to look at PE. Because there's too much up and down. There's too much inconsistency. $12 billion gain, $1.7 billion loss. What the hell is going on here? So let's go to Let's go to the number of shares outstanding.
We want this number going down. This is pillar number 5, number of shares outstanding. We want this going down.
X. This is a fail. 1.8 billion to 2.8. Now, I will say this. It looks like an acquisition was made here, and they used stock to buy it. Because if you remember, their revenue jumped up a lot in these 2 years, and their shares jumped up. So I'm willing to bet there was an acquisition here. Since the acquisition, they also increased their shares. And then this last year, they decreased their shares. So this is still an X, but there is more to the story than just that. All right, let's look at their current assets. 13.7 billion. We want that to be higher than their current liabilities.
It's pillar number 6.
6.7 billion. That's pretty good.
Nice.
So they have plenty of cash to pay their bills. Total liabilities 56. Seems like a lot, but we'll see.
Mm-hmm. All right, number 7, the number 1 stunner. Yep, free cash flow growth over the past 5 years.
Seth, you got your calculator out?
Ready.
1.7, 2.7, 5.5.
Wow.
8.2, 9.2.
Wow. Average of 5. No, I'm
sorry. We want to pay $100 billion to this company according to this?
5.5.
Oh, so 110 billion. It's currently at 150. So the thing I'll say about this company, even if it was selling for $250 a share, I would still be confused by these inconsistent income and cash flow numbers. This is exactly what I'm talking about. You need to go out there and read the financial statements. I will say this: their dividend is 3.5%. So guys, look at this: 0.035 times 153 billion is 5.5 billion. They owe 5.5 billion in dividends every year. And Seth, what was their average free cash flow every year?
5.5.
So they're paying every single dollar of their free cash flow out in dividend this year. That's a problem. I don't like that. So I would look at this and go, is this dividend safe? Why is it like this? This is kind of a red flag for me. So the thing to understand in this company and go learn more about is why was their revenue, why was their profit so inconsistent? Why did they have that big tax, $8 billion tax gain? Even though it's not for their operations. They had some reason. Is it a write-off? I have no idea, but something happened that got them to get a big tax gain. So we got to understand that. I'm a little apprehensive about this, but go look into it because the cash flow is very weird. It's so inconsistent. So inconsistent.
Nope. Says, do you use PB ratio or PTBV ratio
Price to book. He's talking about price to book ratio
for bank stocks?
I don't really look at price to book ratio. That's a big thing in Ben Graham in his books, but I really don't look at it. Again, you might want to look at it when comparing companies within one industry to each other as a metric of saying, hey, how do these guys look? But as this economy, as this world becomes more and more service oriented, the price to book value, in my opinion, gets less and less important.
Paul, what about, it's funny, my son is on. Vinny Vin says, make sure you get my son.
Oh, by the way, really quick, Benjamin Rourke. No, free cash flow is not after the dividend. Free cash flow is before the dividend. You use your free cash flow to pay dividends.
Paul, someone asked, what stocks are you buying for the coming apocalypse? Tax prep company. David S. Pumpkins is wondering, what do you foresee?
I don't buy my stocks based on what's going to happen in the future. I buy my stocks based on what are they selling for now. If they're a good company, do I think they're undervalued today? I'm not trying to guess what's going to be big next, what's going to be the big thing. I don't care. I care about, like we said before, reacting to what already exists. I let other people be emotional and then me make my decisions with as little emotion as possible based on their emotion. Does that make sense?
Make sure you guys are smashing the like button. Paul, let's look at Upwork. Can we take the 8 pillars and look at Upwork?
Oh, I love Upwork as a company.
Too. Yep, for sure.
I'm still bullish on Carnival. I would worry about the second wave, but I still think that if they can survive it, they'll be the company to survive it. Oh my Lord, look at Upwork. This is why somebody was interested in it. Look at that. They skyrocketed. Look at that pretty chart. Okay. So if you want to buy Upwork right now in full, $3.3 billion. For those who don't know what Upwork is, it's a way for people to go on there and offer their services for doing a myriad of things, data entry, design, so many things. And a lot of them have people around the world, so you can get it for much less money than here in the US. We love it. We use it all the time for pretty much all of our businesses. So no income, no PE. They have no income in the last year. Already, I'm like, that sucks. So I'm already sitting there going, okay, what do I do? What do I do here? So hang on a second. Let me just, Upwork. So as an example, Seth, you still there?
I'm here. Yeah, I got you. I'm just, go ahead. I'm reading comments. Keep going.
So if you look here, Upwork, you've got, I don't even have a price for it because I don't have enough data on it. And this is going to be a very common occurrence for newer companies. So just keep that in mind in our Excel sheet. There isn't enough data for me to even analyze it in my Excel sheet. So Upwork, no profit, but look at their gross margin, 71%. And this is expected. This is huge. 71% gross margin is insane. This is awesome. So do they have potential? Sure. Let's go look at their financials. Now, I will be honest with you. I'm not as impressed with this revenue growth as I thought I would be. 164, 202, 253, 300. I would have thought it'd be much bigger than this, but that's fine. Their profit, they've lost money every year, 16 million, 4 million. So we still have we have all X marks here because we have nothing good right now. Number of shares outstanding, also an X. It's going up. No bueno. Balance sheet. Current assets, 318 million. Total current liabilities, 182. So they have enough cash on hand to pay off all their company's debt. That's a good thing. This is a very, very good thing. And it's all cash here and receivables. There's no inventory to be had here. So this is a good, from a financial health standpoint, this is very good. Cash flow, free cash flow, all negative. Oh no, 1 year of free cash flow. So guys, I'm just going to sit there and say, you have to do this by hand. You have to sit there and say, how much do I think it's going to grow? What's going to go to the bottom line? How much will it work? I mean, it's a $3.3 billion company with revenue of 300 million. I mean, the price to sales ratio is already 10 already. It just seems expensive. That's just a really high company. As an example, Amazon, which is massively overpriced, getting higher in the service business, is 4.9 price to sales ratio. A company like Microsoft, 11.6. And that's really, and Microsoft is way overpriced. So this is very expensive overall. Let's Google. Let's see. Google's probably higher than that. 7.4. So it's just expensive overall. Does it have a lot of potential? Absolutely. Would I say no to this one? No. If you really think Upwork could kill it, go for it. Put a little bit of money into it, but be ready to. But it skyrocketed in the last month by 50%. So let's go look at the technicals. I bet you can imagine where the technicals are. Look at this. It crossed over the 200-day. This is the blue line. We want to see when the 50-day goes over the 200-day average. That's a bullish sign, and it's getting wider. So it's definitely on the uptrend right now. This is going up overall, and it's even higher now because it's at 28. So it's not even showing up yet. But, I mean, this is a very positive momentum company. Very positive momentum. So be cautious. From a fundamental standpoint, I'm not touching it myself. But if you believe the story and believe it's going to grow like crazy, I love Upwork. I think they're awesome, and I think long term they will do very well. But you just got to be ready for that. You just got to be ready to sit there and decide. Don't put a lot of money into it, but if it goes up 5-6 times, you put a little bit of money into it, you're going to kill it. You're going to do awesome.
Uncle Drew, I see your request. We'll try and get to it. Prajesh asked, Paul, I called you a couple days ago talking about Callaway Golf. The article was that they are purchasing Top Golf. It has not gone through. Initially they wanted
wait a second. Wait, time out.
Go on.
Top Golf or Top Flight?
Top Golf.
I said Top Flight the other day, and you said,
"Oh,
yeah.
That's why we were confused." So, Top Golf is the driving range. Top Flight. Okay, I'm sorry, guys. A couple days ago, I said Callaway is buying Top Flight. Paul said I don't give a crap. I said, wow, it seems like we're not on the same page. They are buying Top Golf, which was initially supposed to sell for $4 billion. They're getting it for $2 billion, and the stock price has not really moved much since. So there are a lot of folks that want to hear what's going on with this, and what do you think of it? So
when did they announce this?
Just a couple days ago, Monday, I think. But
okay, so it's down quite a bit since the 28th. It's down 20% since the 28th.
No, I think go ahead.
They don't make money. They haven't made money in the last year. So right now it's an X on PE, but to buy the whole company, it's 1.5 billion. So to buy the entire company, it's 1.6 billion, call it, and they're buying Top Golf for 2 billion. You said?
I heard. I mean, unless someone else tells me differently, that's what I heard.
The Callaway CEO said Top Golf is the best thing that happened to golf since Tiger Woods. Okay.
Well, Paul, let me get into this. You have taken your entire Crossroads team to Top Golf. What they're saying is this is a revolutionary company that is making golf fun, especially for non-golfers. And so now we see them pop. Now, we're rare, Paul. We see them popping up all around us here in Akron, Ohio. But there's not that many locations. But as you know, you can take your date there.
We have one location in Cleveland. That's it.
Oh, there's one in Columbus. Sorry. So, but the point is,
there's one in Columbus. One in Cleveland.
You can take your date there. You can take your company there, and everyone can have fun. It looks like it's exploding. Benjamin's saying 2 million in shares, not cash. So, and they're issuing shares to buy Top Golf. Do you want to look at it, Paul?
Yeah, let's look at it. So right now, Callaway's got a good gross margin. Their profit, well, we'll look at the profit, see if it was just some fluke that's happened in the last year.
I think it might be
so
COVID.
annually, revenue growth, 843, 871, a billion, $1.2 billion, $1.7 billion, check mark there. Profit, 14.5, 189, 41, 105, 80. That's pretty light margins there, guys. That's like 6-7% margin, bottom line. They spent a lot of money there on other stuff. Number of shares outstanding. It's an X there. It went from 83 million shares to 94 million, and they're issuing 2 more million shares to, I'm sure Top Golf will be in Washington very soon. And they're issuing 2 more million shares to buy Top Golf. So 2 million shares times
Benjamin's saying they're issuing, Paul, Benjamin's saying they're issuing 90 million shares.
I was going to say, I was ready to say like 2 million shares is only $34 million. Like 90 million shares. Wow. Guy, that's going to dilute the hell out of you. So unless you think Top Golf is literally going to double the company's That's incredible. That's not even a stock split. That's a actual issuing a share. So basically, guys, that's probably why their stock fell so much. Yeah, this is a tough one. So anyways, let's go to balance sheet. 840 million in current assets. 343 in current liabilities. Awesome. So they have $500 million left over there. Liabilities, 1.2 billion. Doesn't seem too bad for a company doing $1.7 billion in revenue. Free cash flow annually. It's tight, guys. Seth, you ready for this?
Go on.
Actually, I'll just tell you right now.
Give it to me straight now.
All right, no, go ahead. So right now, the free cash flow 5 years, so 15 million, 61 million, 90 million, 56 million.
Keep going.
And 32 million. What's the total?
254 divided by 5, 50.
So they're selling right now for 26 times free cash flow. I don't know. Remember one thing. They're also going to be diluting the hell out of you. Oh, man, this is a tough one. Guys, you got to do a lot of research on this Topgolf. I mean, how many locations does Topgolf have? Topgolf total number of locations. 50 plus. Thank you.
50.
Let's see here. Started 20 years ago in England. Oh, wow. Look at that. That's pretty cool. Let's see here. Yeah, I don't know what their revenues are, but I mean, guys, they're epic. Topgolf is awesome. I mean, they do a great job. So you just got to calculate, is this really going to double the value of the business for Callaway? Now, the great thing is I'm sure Callaway's looking at this as a way to get, Callaway's going to look at this and say, this is going to be a way we're going to get more people to be touching Callaway products, offering other things like incentives, games, all that stuff to get the Callaway product out there more. It could be a really good synergy. I don't know if it will be or not, but it could be a very good synergy.
Yeah, Benjamin's saying they have doubled their locations in the past year, 18 months. So, yeah, they're just incredible. It just feels like it's the new bowling alley, the new fun Friday night place. I mean, when you drive by, Paul, even in like COVID, that parking lot is jammed. I mean, they are doing something great. So, Paul,
yeah, they have a lot of potential.
How long do you want to go today? It's past.
Oh shit! I didn't even realize that.
Yeah, we have tons more stocks people want to hear about.
How are people? How are our likes? 60 likes, huh?
We're doing great.
The new bowling. Yeah, you might be right.
Yeah.
Okay. So what stocks do people ask for? Pick up. Give me one.
Okay. How about
wait a second.
Go ahead.
Wait a second. Can we talk about something?
Please do.
The Fed just announced that they're going to leave rates unchanged and maintain existing commitments to provide sustained stimulus as virus cases increase. Okay, does everybody understand this? Like the Fed is just basically saying, yeah, we're going to keep money flowing here. And they're going to allow for all the money in the world to go out there to keep the virus, to keep the economy going during the virus. What do we think about this? Seth, what do we think about this?
Well, so Paul, Elon Musk got in trouble earlier this year because he said, I wish they wouldn't stop giving away this money. In the long run, it's bad for us. And of course, people hang wealthy people out to dry when they say we shouldn't be pumping money in the economy. So I have heard what you've said is it sounds bad, but you do think that companies that deserve to fail should. And I don't know about people.
Well, if I don't believe in personal welfare, I definitely shouldn't believe in corporate welfare. Because of that exact reason. Why are we bailing out rich people?
Yeah, so...
Now, some would argue, well, Paul, it saves jobs. I would argue it hurts jobs in the long run. In the short run, absolutely it saves jobs. But that's like saying, you're not going to like my analogy, let's do cocaine right now because it feels really good right now. But it has problems in the long run. But I want to feel really, really good right now. It's just, guys, this is going to cost us all down the road. If we have a lot of inflation down the road and people start complaining, you know what I'm going to say? Yeah, you wanted it. You wanted these big
Paul,
checks.
I think in general, though, some people, it's more than a want. I mean, they have to. Aren't people really suffering? They really need this, or do we let the economy? It's. I mean, not to get too political. I don't know what Biden's going to do to change. He says he has a plan, or Biden or Trump. But I mean, it's going to be interesting
It'll be
how
Biden.
this all plays out. What's that?
It'll be Biden.
Yeah. So, people were saying, I talked to those who lean on the right, saying, after November 3rd, this COVID's going to go away. So if we stop, it seems like we're definitely stopped caring about it as much. There are businesses that are booming. Where am I going with this? What do you think? Again, it's tough to say that people wanted this money. Obviously, they want free money. I think what you'd like to educate people is where that money's coming from and how it's going to affect. So tell us, how is it going to affect us in the future?
So guys, the more money we have in the economy, the more inflation, the more that's inflationary, because if money's easy to get, people just start spending more. When they start spending more, prices go up. When they start spending more, now it takes more money to hire somebody. Everybody out there knows somebody who did not take a job during COVID because they're like, well, I'm already making plenty because of my COVID stimulus. Why should I take this job?
Yeah.
So now they have to pay people to pay more money. When companies pay more money, what happens to the cost of their products? They go up. So when the costs go up, what do you have to pay? You have to pay more money. Other businesses might sit there and say, hey, it's a downward spiral. It's this domino effect that happens. If you're okay with that, great. But you can't come back later and say, oh my gosh, all these costs for me to live are so high now. If you're making $40,000 a year and all of a sudden your cost of living goes up 20%, you can't afford that. I can afford that. You cannot afford that. It's just, you have to pick what you want and stick with it, because you have to remember, though, that yes, Seth is right. People need to pay their bills today. And trust me when I say this, I've heard many people say it. I don't care about tomorrow. I care about today. Fair enough. I will never argue that. I get that. But then tomorrow, by the way, today is tomorrow. Because guess what's happening today? I think if we did the right thing in 08 and 09, we wouldn't have had today as bad. That's the other thing. So people are saying, we only remember today as, no, it's today. But we're not going to remember 10 years from now when today's effects occur 10 years from now. It's not going to be like, oh, damn, shoot, we shouldn't have printed all that money. It's not going to be that. It's going to be us having the exact same conversation again with Uncle Seth saying, yeah, but Paul, people need the money today. I get you. But if you think for 1 second that this is not going to cause a problem down the road, you are delusional. Are you okay thinking that? And just sitting there saying, like, I don't care. Fine. But when people talk about the U.S. losing its competitive power, this is part of it. But guess what? If you think for a second the U.S. doesn't want major inflation, of course they do. You know why? Because they have lots and lots of debt. And the way you make lots and lots of debt become less debt is by inflation. You make the GDP skyrocket artificially, and now all of a sudden you're $20 trillion in debt. It's still $20 trillion in debt. So your GDP is skyrocketing while your debt's staying the same. So, hey, more power to them. I'm just telling you, you need to save. You need to put money away so you're not a victim of this. So that if you ever lose your job, you don't have to sit there and say, I'm going to sacrifice my beliefs on this. That's just the reality of it. And the Fed is probably in a very low interest environment for a while until all of a sudden everybody starts complaining that inflation is too high. Because I've lived during bigger inflation times. We've all lived, like Seth and I were living in the 80s. We got through it. We got through double-digit unemployment and massive inflation, and Reagan came out and said, guys, it's going to be rough for a while, but we're going to come out better. And tell me we didn't have the massive economic boom of the 80s and 90s. 100% we did. And everybody gives Clinton the credit for that one. I give Paul Volcker and Reagan the credit for that one in the early 80s. They did what was right, even though it made people hurt for a while. That's it. And I criticize Bush in 2007 and 8, giving all this TARP money out and bailing out all these companies. Did they feel they had to? Absolutely. Because Anytown USA couldn't go under. I get it. But that's why you have shitty car companies that have no margins, that have all these things that happen. Unfortunately, you either get today or you get tomorrow. You can't have both. Can you have a balance? Of course you can have a balance, but you got to pick which one. You got to sit there and say, do we care more about tomorrow being stronger or today being stronger? Just like when you're in a relationship. If you're fighting with your spouse right now, you might have to go have serious conversations about your relationship. That's going to suck today, but it might make tomorrow better. If you're sick with cancer, you have to go get chemotherapy. That's going to suck today, but it's better for tomorrow. That's just the way it is, guys. It's no different than anything else in life. Sometimes you have to break down in order to build back up. And right now, I'm not going to ever sit there and say to somebody, don't ask for your money. But I will say, don't complain later when the problems that are occurring because of massive inflation are affecting you. because it will affect you. It'll affect all of us.
Paul, I think people are already complaining. I mean, we talked about this. Look back when this all started. We've been talking about this all year. How is jobs going down? People aren't making enough money. Then like buying is up. The housing market's absurd. It makes no sense. But so like people are buying into this. They're getting into this craze. How many people do you know are buying, selling their house? I mean, like my sister alone sold her house in an hour. They literally they went to go look at a house. They had to drive there and make a decision in the house.
Seth, you were selling your house and you were complaining in 10 days it wasn't sold yet.
Yeah. Well,
listen, I get it. And these feel good, but then when it's just like when stocks go up a ton, we all feel great. But when the stocks fall, we complain. Well, you can't have your cake and eat it too. These are part of everything in life. Life is about, that's why I look at historical averages, because overall things will go to the average over the long haul. That's it. And anyway, I'm not really fired up. I sound fired up. And I think Seth would vouch for me. This is probably me on the calm side. I just want everybody to realize we have decisions to make. And we have to live with those decisions. You make your bed, now you sleep in it. I'm okay with that. Just like when I make a bad investment, I go, okay, I made a bad investment. When I do something I'm wrong, okay, great. Now, do I have more discipline than most? Sure. But I'm just telling you, as somebody who studies the history of money and the history of investments, this is going to cost us down the road at some point. How? It might be ways we don't even see today, but it will cost us, because if it was just as easy as printing money all the time, then the whole theory is, then why charge taxes? Why should any of us pay taxes? That's it. If it's all about just printing money, then we shouldn't pay taxes ever. Make the tax rate 0, print all the money, pay for everything. There's a reason we don't do that, because it does not work. And I love Tom's comment. Tom, unfortunately, we're not hiring right now, but that was funny.
Wow, Paul. Yeah,
And by the way, to Dave, I don't agree with you. Interest rates have not been low for decades, and the rich have gotten richer, but the lower and middle class have gotten a lot richer. Don't buy into the BS that the low and middle class. Just do me a favor, go to a third world country or go to a second world country and tell me that you see rich and poor people looking the same. In this country today, look at the way I'm dressed and look at the way Seth is dressed. Usually I'm dressed in shorts and workout gear. You can't tell that I'm worth many, many, many times more than Seth. The lower and middle class here in this country have it very, very good. Does that mean we shouldn't help? Absolutely not. And have the rich gotten richer? Absolutely. But don't think for a second, don't buy into the whole BS that the lower middle class had not gotten richer. In the last 2 decades, real income has been flat. Has been very, very bad. I get that. 100% get that. You are 100% right. And the rich have gotten richer. But if you look at the history of the U.S., and Warren Buffett will even say this, 50 years from now, everybody in the U.S. will be better than they are today. Everyone will.
Well, that's true, Paul. I brought this up to you. I think the difference is, like, while normal people keep seeing the CEOs, and it's silly because I'm not a big fan of the media, but when they say Jeff Bezos literally has $150 billion of cash sitting in, you know what I mean? When they say that kind of stuff, right. But the point is, I think that people in a sort of, I would say the viewer's side of the fence, Paul, not being someone like yourself, is, as I said last week, I was in the tub talking to you because I bathe, Paul, I'm a big bather, but like when we were kids, 60 grand was a lot of money. And right now 60 grand is still a lot of money. I mean, I think, you know what I mean? The person working, wouldn't you say in 1989, if you were making 60 grand, you had a pretty good job? And right now, when you're making 60 grand,
here's something funny.
Go on.
Here's something funny. My dad made 60 grand in 1989. He was an assistant professor and a doctor in St. Louis at St. Louis University. And I remember reading the letter where they gave him the promotion and said, your new salary will be $60,000 a year. And that was huge money, because in 1984, my dad was making $18,000 a year as a doctor. And he was a doctor, so he had upside potential in his rent, but in his income, $60,000, I still consider a lot of money. I still do consider a lot of money. But back then, it was I remember watching, what was the show? Family Ties. Michael J. Fox was bragging about making $70,000 in like 1987 at his first job. And he jokingly told his parents, they're like, what are you going to do for laundry? He's like, my $70,000 will do my laundry for me. I mean, that was insane money back then.
Okay, yeah.
And it's still good money today, but it's not insane money today. Right. Now, insane money out of college would be $150. That's an insane amount of money for anybody out of college. I had friends 17 years ago made $400 grand out of college being investment bankers. Remember, I'll pull it up right now. Seth, if you could share my screen.
Go ahead.
U.S. GDP per. My dad is actually coming up to.
Get him on the show.
No, he's coming up. We're supposed to meet with them. Look at this, guys. This is history on GDP per capita. In 1961, the average person in this country made $3,000 a year. And over time, it just grows and grows and grows and grows and grows and now everyone's making 64. The average person is making 64,000. In 1989, so look at it this way. This is a prime example. 1989, the average person made 22,000 a year. The GDP per capita. Now it's 64. So that's 60,000 a year back in 1989 it was like 180 today, maybe 200. So I remember when my dad made that, we were like, oh my God, that's a ton of money. It was a ton of money because it was like 200 grand today, right? And over time, everybody just does better. When we left college, Seth, right here, we left college in Q2 03. The average person made 40,000 a year. We're already 60% higher than we were back then. Look at this. Let's look up average hourly wage by year in the United States. Let's look up that one. Let's see what that is. Okay, 25 years. Look at this, guys. This is the average hourly wage. It was below $12 an hour back in 1995, and now it's $25 an hour. Okay, so it's still going up. And this is the average hourly earner. You know what I mean? It's still going up. So when I hear that, I'm like, does it feel like it? Well, we can't complain when not everybody can have an iPad or something like that. That's not right. That's not society. We're not trying to make everything equal. We want to sit there and say, do you want more? Great. Go earn more. Go make more. Go do more training.
Paul, I think that's that's something you've been preaching to me for years. And really the reality is, like, as hard as it is and the environment that you're in and the community that you're in, you can make it out. It just takes a lot of hard work. And I think the trend nowadays is people definitely are looking for more for less work, right? I mean, so.
Yeah, and that tends to happen in more developed societies in every single generation. It's more entitlement, all that stuff. I'm not trying to get into politics. I'm just trying to say, guys, we have it pretty good. I'm from the Middle East. I was born in Iraq. My family jokes and we say, if you go to Iraq, you can tell who's rich and poor just by blinking, just by looking at them. Oh, that person's rich, that person's poor. Tom writes in there, spent 22 years in the U.S. Navy. I've seen what poor looks like around the world. We have it very good here. You're still in charge of your future. No candidate is going to make that's why I don't care who wins, because I know me, and you guys are all on this channel watching us, which means you're trying to make your life better by learning. So you're already ahead of the game by leaps and bounds. You can and will do better because of that. So, these are things to consider when everybody's complaining about what's going on in the world, all that stuff. Like, we have it pretty good.
Yeah, I mean, from a personal aspect, folks, if you're watching, just to maybe go back, if you're new to our channel, Paul and I went to high school 20 years ago. We knew of each other, didn't hang out one time. We reconnected because of Facebook and because of the Cavaliers just a few years ago. And we were drawn to each other. But I mean, I come from my dad drove a dump truck. He worked really hard. He died too young. Money was just a constant fight in my family. I've been worried about it ever since. And then Paul came into my life, and I've just developed this discipline. So it's weird to say that you can go on YouTube and learn from someone like this. But that's what's
so great about this country, though. You can go on YouTube and learn.
Yeah, I mean, I try to tell my kids, like literally, Paul, when you and I were playing Little League Baseball, your dad taught you how to swing. Some other dad taught you how to swing, and that was it. And nowadays, within 2 clicks, you can get Bryce Harper, the best hitter in the game, on a YouTube teaching you how to there's so many more opportunities out there, and this is one of them. So if you're watching, you got to keep Paul in your mind. I literally think about when I'm making decisions of a little baby Paul on my shoulder, a little angel Paul on my shoulder, trying to help me through some of these decisions. What would he do? How do I be disciplined in this situation? And you've done a great job for me, Paul, and we're trying to get more people, get you in front of more people. And your likes, your follows, your shares, and subscribes really helps, guys. We appreciate it. So.
And by the way, to Caesar, I was playing baseball. I was shortstop and second base. I was reading books as well. I was actually a pretty decent baseball player. I batted 386 in Little League, which probably isn't very good for Little League, but I did pretty well. Mason is a friend of mine. He asked what I thought of minimum wage. I don't believe in minimum wage. I believe let the market set where it's at. Guys, this is a great pot. There's a great live session. I want to keep on doing more. I'm glad we figured out a way. Seth really pushed me to do this today. This is great. We're probably going to do more of these like this because it's easier for me to control. We love the studio. Just let us know. We're going to figure out how we make this more like the studio, how I can control like the laptop and the screen for the studio. But we'll probably do a lot more of these like this until we get the studio figured out fully technology wise. Because I hate the fact that we have to like wait sometimes. But, Don and our newly paid intern, Nate, are figuring out how we can make the studio work flawlessly. And this is great. I appreciate everybody. Please like it. We have 59 watching right now, only 65 likes. I know we've had hundreds of people on. We always have over 300 on it over the time period. But Seth, anything else you want to add?
No, I love you guys. I appreciate you guys being awesome. And we will keep doing these Tuesdays and Thursdays. Join us for the live stream. See you guys. Love you, Paul.
Bye. See you guys.